real quick, I'm not going to take long with this. The idea that we're trading off of historical probabilities and putting on trades based on the behavior as described by historical probabilities does not mean that the probability that you think you have historically, something that you've studied, hopefully you've studied a big enough sample to have a high confidence, it does not mean that that probability is the probability of the outcome. You've heard this before from me, probably. But really, our goal with studying history in a probabilistic statistical way is not only to describe the nature of the behavior, but it is think of luck as a flow of air, as wind. Okay, we are trading. Our outcome on every trade is absolutely and completely random. There's nothing you can do about that. You can jump up and down. You can pay for the greatest system and the greatest quant and so on. But at the end of the day, the outcome is completely and utterly and persistently random. Okay? And so luck is a huge factor by the simple virtue that it's random. There's an element of luck to trading. Now, that element of luck is not the same as you would have in roulette or poker or slot machine. It's a little bit more, you have a little more control over how you interact with that luck in terms of what you execute, what information you wait for versus what price you're going to give up for that information, and so on. I've talked a lot about this on the information versus price risk discussion. But what I want to say is this. We come in here every day like kite flyers. Luck is constantly streaming. It is a wind, okay? It's just constantly flowing, and some of it's positive, some of it's negative, some of it's going to cost us, and some of it's going to pay us. Our job as a trader is to fly as big a kite and as wide and as high as we can. And we do this by knowing what the nature of the market is, trying to describe it in probabilistic historical probabilities as much as possible, exploiting that behavior. We want our kite to catch as much luck in that statistical probability as possible, and then knowing ourselves well enough to be able to execute our plan consistently without hesitation. These are important pieces, really important pieces to have in place. So someone who's coming in and is trying to just grab someone else's kite that they found on a forum somewhere in a Skype group or something and tries to fly it without understanding, you know, how the shape of the kite impacts their luck, their historical probabilities, without knowing how much string they have, without having all of these things, because they didn't build this kite. They didn't build it. They just picked somebody else's and decided to fly it with real money. Now, that would be a dumb thing to do, knowing that you may have $5, $3, $10, $20, $25,000 on the line. I would want to build my own kite. I would want to give it the shape that makes sense to me. And I would want it to have the best possible opportunity for soaring up and going as wide as possible to capture as much of that luck wind as possible. And that luck wind might capture a lot of negative luck or positive luck. This is really the bottom line here. This is the bottom line. You're not going to be a drone flyer in this wind. You're not going to get to pick which luck you're going to get. So you're not going to be able to pick which setup is going to be the one that pays you, which setup, which is legit, is the one that you should pass on. We are all flying kites. We're all putting our sails up, and the biggest sails get to capture the most luck. And if the probability plays out, then capturing the most luck exposes your true edge, and that edge is hopefully positive based on a historical probability that you're flying. So every time you go out there and say, you know what, let me just take a chance. I'm bored, like yesterday, terrible trading. I am bored. I'm just going to throw one out there. All you're doing is basically saying, I'm just going to sacrifice this money and see what kind of luck I'm going to catch. And because you're doing that, you're probably not defining the true edge that you have. You're not defining the risk and so on, and you're gambling. It's just absolutely and positively stupid. So if your goal by listening to these Trader Bites, and the goal of these Trader Bites is to turn as many listeners as possible into career professional traders, that is the goal of Convergent Trading. That's our stated mission. And so if your goal is to do that, then you need to act as a professional as much as possible, as continuously as possible. And that's really the intent. And we just let that edge show up. And you're not going to have that edge show up if you run out of money. And a good way to run out of money is just to pick up kites and just throw them up in the wind. Pick up the next kite, throw it up in the wind. Pick up the next kite, throw it up in the wind. You don't know why you're doing it. You don't know what the kite is for, because you're picking up someone else's ideas and just throwing them up there. You need to build your own kite. Some of them may overwhelm you. They're too big. It's too big a kite, and you might get lifted off the ground because your account's not big enough to hold you down. Some of them are too small and end up cutting you up in little pieces over time without capturing enough of that luck. You need to find something in between that matches your risk tolerance and so on. Derivatives trading is not suitable for all investors. Remember that. But you can set yourself up for the maximum potential success, and then it's luck, it's lady luck that determines whether or not you make it. That's all I have for you. Good luck.
Okay, good morning. Just thought I'd start off with a little bit of wisdom. That was back, FT71, Futures Trader 71, back from March of last year. It's just something I found on his YouTube channel, and just kind of wanted to listen to that. And then I saw this beautiful setup here in the 10-year, and I just couldn't. I had to take it, even though I wasn't able to get on the mic and kind of explain what was happening. But I'll back up real quick. What I kind of saw was what is exactly happening right now. Excuse me, I'm still trying to caffeinate here, but it's you got the ES pushing down into the lows. You had all these products pushing up into the highs. At least the 5-year, or at least the 10-year and the 5-year were pushing up into the highs. And then as soon as this thing snapped back and started to move higher, you saw sellers step in pretty aggressively. 2,500 right here. I still have that order hanging out, but I don't think I need that anymore. But they stepped up pretty quickly. Couldn't get filled at 12, so I paid up and got filled at 11.5. Yeah, and we're trying to see how this plays out here. Hoping this kind of does a little double bottom, starts pushing back up higher, the ES that is, and that will kind of extend this move a little bit lower. The good thing is that we've only seen basically one back tick right here thus far from buyers as the ES is falling back in, which is good. Otherwise this might be a one tick pony. Just kind of keeping an eye on it. But that was kind of a really juicy setup that I saw there, so I had to kind of jump on that before kind of going through the morning routine. So what you're looking at here is the Jigsaw day trader platform. These are futures products. This is all just trading on order flow. There's no charts, there's no indicators. It's all just watching the price action and responding in kind. From left to right here, this is the Ultra Bond, symbol UB. This is the symbol ZN, which is the 30-year T-Bond. This is the ZF, which is the 5-year Treasury. This is ZN, which is the 10-year Treasury. And all the way over here on the right is the E-mini S&P. And in a healthy, normal market, which is kind of what the context is showing me this morning, is that when this product goes down, these products all go up and vice versa. So I was able to kind of play that contrarian play at that just now that I just described earlier. You had the ES kind of opened, went higher, and then was pushing into the lows fairly aggressively, and that's when the 10-year shot up several ticks here. You can kind of see how far it went up, about 10 ticks, and just sort of paused there and waited for this thing to snap back. And sure enough, as soon as it did, like I said earlier, sellers stepped up and drove it down. I'm just waiting for some sort of follow through. Had a little bit of a pause here. If buyers get too aggressive, then it's just, you just have to take what the trade will give you. But that just pulled off really nicely right there without anything kind of hitting down into it. It already pulled off, which tells me I'm probably going to get my first target filled. I'm hoping. It just tells you that there really isn't any solid buyers there. But we'll see. You never know what can happen. So what else? Pretty decent short-term trading profile in the overnight. What you see right here. Pretty nice little step. Here, look at that. Just nothing there. What is going on? Oh, there must be some fucking news coming out. Oh, shit. You got factory orders coming out right now. Well, let me, that's what I get for not following my process and not looking at the calendar. You have ISM non-manufacturing. That's coming out right now. I got filled on one. Let me see if I can set this up real quick. Oh, that's not going to work. Okay, well, I got filled on the other one. Shit. See, that was a big no-no. I got lucky on that one. Yeah, ISM was coming out, factory orders. That can be a mover. Obviously, looks like it is. That's when you saw the bids and offers thin out like that. Whew. I kind of panicked right there. I should have just flattened that position and been done with it. That's what you get for not following your process. Yeah, so we had international trade. While we're on the topic, we had international trade at 5:30 this morning. We just had factory orders in ISM, like I said, non-manufacturing index. And then we have the 3-year note auction, which is at 10 a.m. So let's see, just for shits and giggles, let's see what the ISM came out at. Consensus was 54.5 and the actual is 55. So a little bit of a beat. Sorry, I got a little distracted here for a second. I'll pick it back up. Okay, yeah. So that's all for today as far as the announcements, anything on the economic calendar. That's about it. So areas of interest, we have the overnight high, which we just held to again. It held pretty much, we got up here in right around, let's see, this is what, 7, it'd be about 7 a.m. Eastern time, so 4 a.m. my time. Just lingered around here quite a bit. Just held it again. And the overnight low actually held several times during the overnight session as well. So those would be 2 areas of interest until we penetrate those. We'll kind of let this residual from the announcement kind of shake out a little bit, let it play out, and we'll see what happens. But I guess for now, we'll just go ahead and pause the video. Trade number 1 in the books. Looks like, what was our total on that? 8 ticks. less. Not too bad for a first trade. Anyway, we will pause the video and come back if something else comes up. Well, it is almost 10 to 9 a.m. Pacific time. And we have not really done anything other than just trade in this little range here. We got down to the overnight low in the 30-year, but I missed it. Wasn't paying attention. So that quickly went back up, and we're just sort of trading this range today. So unfortunately, I have other things to do. So I am going to be done for the day. And I guess I'm lucky to have caught this this little short here, even though I did get caught off guard with the announcement. But still feel fortunate to have that in the bag for today. So that's all for me. Hopefully I'll be back tomorrow. We'll see how things play out. But schedule permits, I should be back. And hope everybody's doing well and trading well. And that's all for me. Bye.